I'm Rick Lovall, Vice President and Senior Loan Officer of the Church Loan Fund, which is under the Stewardship Group of the United Pentecostal Church. I want to begin by saying thank you to North American Missions for this opportunity to provide this seminar on creative church finance. It is an honor to work with the NAM team and provide our resources, pool our resources to help our churches grow across North America. To begin, I want to tell you about a project that we worked on in 2020. We were able to analyze all of the loans that we've provided over the last 10 years. And we learned some things with those loans that helped us better understand the positive trends that can happen as churches begin to grow. As a pastor and a church planner, it's really difficult sometimes to project your budget. How do you know when you're able to borrow money to buy that building or to buy the land that you so desperately need? Is there a way to calculate what your revenue might be whenever you reach 30 people in attendance, 50 people in attendance, even past the 100 mark? As you look across other organizations, other denominations, we've learned that our numbers do not match up directly with their numbers. And the reason is because United Pentecostal churches teach the principle of tithing. There are numerous organizations and churches that do not teach that principle. They teach the principle of giving. Just whatever people feel to give, that's what they base their budgets on. But within the United Pentecostal Church, we have both tithing and offerings. So because of that, our average dollars per giving didn't really match up. So we needed to know, what is our averages? Last year, we compiled all of this data, and we learned that on average, the average attendee of a United Pentecostal Church gives approximately $2,200 per year. Now, that number can change depending on the size of the county that you live in, your population. It can change based on the age of your church. As a new church plant, you may have 20 or 30 people coming, but they're not all discipled yet to the point to where they're giving tithes and offerings. So we understand that there can be a little bit of a gap in some of those measurements. But across the board, it is very safe to assume that the average attendee gives approximately $2,200. This is obviously factoring in children and other folks who come that do not give money. We took all this information and we created a dashboard that we've put on our website that I want to show you in just a moment that would help you project how much income you're going to have as your church begins to grow. And I want to show you in this how you can look at and time out when are you going to be able to afford the loan that you need so that you can purchase this property. Let's go to this website. You can see this is the UPCI loanfund.org website, and under resources here, we have church budgeting. This church budgeting tab is going to provide a lot of information for this seminar today. As you can see in this budget format, there's a lot of information provided that can help you estimate income. It can help you estimate expenses, as well as project potential loan amounts. On the left-hand side, there is a button here that says Estimate My Income. We're going to move the average attendance down to about 50 people. And you can see in this blue circle, it is estimating that the average annual income for a church of 50 people is around $96,000. As this number begins to grow, I'm going to slide this bar up, and you can see these numbers growing. Once you get to 100 people, you see that the average revenue is around $204,000. One of the other things we looked at was, what are the average expenses of United Pentecostal churches? For those who have payroll, what would that average expense be? You can see here on the right-hand side, if they have debt or rent payments, what would that average be? Operations to fund, whether it's funding your Sunday school department, it's funding other operations, community outreach, but also paying your light bills, your utility bills, also missions giving and emergency savings. Factoring all this in, we were able to build this up to where we can see now how a church, as attendance grows, how the budget can grow with that. We would encourage you to get on this website, play around with these numbers, and see how closely this represents the church that you're at. You will also notice on the left-hand side, there is a county population selection here. We've learned that these numbers can change as the the population of the county grows. So if you're in a population of 250,000 to 1 million, you check that, you will notice that the income does go up just a little bit. If you check the more than 1 million in your county for a metro population, you see that it goes up even more. All this is factored into this budget screen. I want to encourage you that as you begin to look at your budget and as you begin to look at how your attendance growth will also produce income growth, make sure that you are being very intentional about teaching the principles of giving, making sure that you understand that as people become more discipled, the giving can increase, because the sustainability of the church is dependent upon tithes and offerings. And I want to show you as we go through this seminar today how important it is to establish those trends, very positive giving trends. There are 3 areas that I want to focus on that are essential for a church that is preparing to borrow money. You know, whether it's 1 year out, 2 years out, 3 years out, maybe 5 to 10 years down the road, maybe you're not sure when you're going to be able to borrow, but you know that when it comes time to borrow money, when there's a door of opportunity open in your community, you want to be ready to meet that need. We've had several churches that have had opportunities to buy vacated buildings, to be able to buy even existing church facilities that have been vacated because of the COVID pandemic. Churches have shut down. Those buildings are coming for sale, on the market for pennies on the dollar. But unfortunately, we've had churches that have not been prepared to borrow money to be able to take advantage of those opportunities. We want to be able to help you prepare for those moments. The first thing that I want to encourage you to do is make sure you have proper legal structure. North American Missions can definitely help you achieve that. That is making sure that you're fully incorporated, making sure that you're not relying on, not having accounts opened in your own personal name. We know that some pastors in the past, when they start a church, they start a church account under their own personal name. We would definitely advise against that. Make sure you have the full legal status in your state to be able to operate as a church business in that state. Whenever we loan money out, we do not loan money to individuals. We can only loan money to corporations. And banks are going to be the same way with that. The same policies apply across the board with that. They want to, when they file a mortgage on a property, it has to be in the name of the corporation itself, because attendance can change. Board members can change. Even the pastor can change. And even though the pastor changes, maybe the board changes, attendees change, that doesn't change the fact that there's still a mortgage out there in the name of the church. So make sure you have your legal structure in place. If you have more information or need more information about that, I know that Brother Sistrunk and his team would be happy to help guide you through that process. The second thing is financial structure. I understand I was a banker for 15 years, and then I also pastored a church for 9 years. I had the benefit of coming from a financial background. So when I pastored, I understood the financial aspects of it, but I also recognized that the majority of pastors do not have that education on what financial management looks like, what a profit and loss statement looks like, what a balance sheet is, why we need these items. We want to strongly encourage you to be able to develop financial structure so that when you apply for a loan, whether it's through the church loan fund or if it's through your local bank, you can provide them with very accurate financial statements. A profit and loss sheet may also be called an income and expense statement. Your accounting program may call these also a cash flow statement. There's different names for it, but the point of it is that you're able to document the specific income streams and the specific expenses that flow out of your accounts. For example, the church loan fund, there are certain ratios that we look at to make sure that your church is financially healthy. What is the percentage of debt and payroll as it relates to the total income? I'll show you in just a moment how this factors into some of our equations. You want to make sure that you have this documented information so that when your lenders ask you for that, you can easily provide it to them. It helps speed up the process. To give you a little more detail on that, when a church, in the last 2 years, if a church applied for a loan with the church loan fund and they had all their financial documents together, we could easily close that loan in less than 60 days. Some of them were 30 to 45 days. There was a very quick turnarounds. However, we've documented that there are times where the average closing time takes over 250 days. And the number one reason behind that is because the church does not have its financial structure in order. They're not able to provide the profit and loss sheets and the things that financial institutions analyze to be able to make the decision on that loan. So to speed up that process and be prepared, please make sure you're working, whether it's establishing QuickBooks, whether it's working with an accounting firm, a bookkeeping service, whether it's having another program, a software program that can provide that kind of information. It is essential that you have that set up so that you can quickly work through the process whenever you want to make a bid on a piece of property. The next thing I want to look at is cash on hand. In the finance world, we say cash is king. You can almost never have too much cash in the bank. There have been churches that I've worked with this year that were unable to acquire a piece of property simply because they did not have enough cash on hand. We typically require 25% cash down on a purchase. Now, that number can change. It can change for various reasons, but we want you to understand that when you go to buy a building, you're going to have to put cash down, whether it's working with the church loan fund or it's working through a local bank. But more than just cash down, there are some other things that many pastors don't know about that I want to educate you on today. Whether it's the church loan fund or it's a bank, there are laws, if you will, within your loan documents called covenants. As part of your promissory note, you promise to provide information in the future. You also promise to abide by certain restrictions. For example, it is very common for a lending institution to require a church to have 3 to 6 months of cash reserves on hand. That can be in the form of payment requirements. There are lending institutions that require that a church have at least 6 months of payments, at least a year of payments. I've seen them require up to 5 years of payments reserved in an account, so that if there's some kind of a hiccup, if you have two families that move out and you have a dip in your income, you have that to rely on to make your loan payments. But on top of that, there can be another restriction called a cash maintenance restriction, which also says that a lending institution wants to see $5,000, $10,000, $15,000 in your general operating funds. That's not restricted for payment reserves. So this is general operating expenses. It is a great rule of thumb to have at least 6 months of your operating expenses set aside in a savings account. Again, this is outside of payment reserves. This way, if you have an emergency that pops up, if you have there's some issue that happens within the church, maybe on the property, you have damage to a roof, you have something where there's an insurance refund timing, there's something going on to where you need cash right now. It is very important that you have those reserves set aside. So again, I want to cover those. Down payment reserves, payment itself reserves, and the third one is cash maintenance reserves. This seems like a lot of money, and for a church plant, it can be overwhelming. But in realizing that, North American Missions has launched a new program that I'm introducing to you right now called the North American Missions Loan Support Program. There are funds that have been set aside to help support those requirements that I just told you about. For example, let's say you have 20% cash down, but for you to be able to support the payment, you really need to put 25% cash down. So you have that 5% gap. And let's say that 5% gap is $30,000. Okay, instead of having to put that $30,000 down, North American Missions will guarantee $30,000 of your loan up for an extended period of time. Generally, it's up to 3 years to give you time to be able to raise that much money. Now, this is not a gift to the church. This is not a grant to the church. This is simply North American Missions saying, hey, we'll guarantee that $30,000 just so we can get them into that building. Another thing that North American Missions has offered to do is provide those payment reserve funds. So instead of a church having to raise an extra $10,000 for payment reserves, North American Missions will guarantee up to $10,000 of payments. And again, this is for a specific time period, for example, 3 years. This is a way to help a church get into a building that they need to get into without having to use all of their cash up. And again, the final thing is cash maintenance. We can also work with North American Missions on establishing a cash maintenance reserve. This loan support program can be a game changer. We've already seen it work for a couple churches. We just rolled this program out. We've already used it for one church, and it was an incredible opportunity that was brought to a church in a metro area to buy a vacated church building. They had enough money for the down payment. They just didn't have enough money for payment reserves. But this NAM loan support program provided the payment reserves so that they could get into that building. It's an incredible story, great testimony, and God is moving and growing that church right now. If you would like more information about the NAM loan support program, you can reach out to me at the Loan Fund. Also reach out to Brother Sistrunk and the NAM team, and they will direct you in that regard. I want to talk about a couple myths that I've heard. I call this myth busting. There is a mindset that your rent payment should be looked at just like a loan payment. And this is not the case. If you're able to make a $1,000 rent payment, that may not mean that you're able to make a $1,000 mortgage payment. When you have a rent payment, you don't have to worry about saving money for repairing the roof or the water heater going out or some other catastrophe like that. However, if you're making a mortgage payment, that means you own the building. And so mortgage payments are typically more restrictive because we want to make sure that you have enough cash to handle the owner obligations. If that's your building now, it's your responsibility to repair what's gone wrong with it. So because of that, there may be some more restrictions. And I wanted to bring that up because I've had several church planners who say, well, we've paid a $2,000 rent payment. We can make a $2,000 mortgage payment. Yes, you may be able to make that payment, but it also may mean you don't have enough money to cover your other emergency expenses. And as a lender, I want to make sure that you're able to cover those expenses. You don't want to have to come borrow money every time you have a water leak. You want to be able to set up those cash reserves to be able to handle those kind of things. The next thing is the importance of sustainability. Sometimes it can be easy for a church to raise money to be able to provide for a down payment, but they don't understand why they can't get the loan. And the reason is not because of the money they've raised up front. It's because they don't have enough tithing and offerings coming in every single month to be able to sustain the loan going forward. Before you launch into a building program or you launch into the purchase of a new property, even if it's buying the property you're renting, make sure that you can provide proof of sustainability. You can show, again, over the last 3 years, we've had enough money coming in that we could have handled the mortgage payment, the cash reserves, building up the payment reserves. We can do that, and especially show that you can do it going forward. This is a very important concept when it comes to understanding why some churches can get loans and why some of them may struggle to get the loan that they need. And again, that's whether it's the loan fund or a local bank. Again, cash is king. The cash that comes in every single month. This is why it's so vital that as a pastor, you teach your people the consistency of giving every single month. Again, tithes and offerings. When you teach those things and they put it into practice, it creates sustainability for that church. I want to tag in also on this. We've had some pastors who are bivocational. And in that bivocation ministry that they have, they make a lot of money outside of the church. And so they want to agree to support the loan or guarantee the loan on their own. There are banks who do accept that. We have accepted that in the past. However, it is not typically what we like to do because we understand that if God called you to that city, God could also call you to another city. And 5 years down the road of having that mortgage in place, God may move you out of there and move your income out of there. We want to make sure that the church body itself can support the mortgage payment whether you're there or not. And as you look at that, it's very healthy for a church to be able to do that. It's not really healthy for a church to depend upon the pastor's bivocational income to support everything in the church. You want to be able to, again, teach that giving so that the church can support the mortgage and all the other things that go with that. I want to close this by encouraging you to make sure that you are planning for what you're praying for. You are planning for what you're prophesying about. Remember, it was Jesus that said, if you're going to build a tower, sit down first and count the cost to see whether you have sufficient to finish it. I love how Jesus didn't say, make sure you have sufficient to get started. Jesus said, make sure you have sufficient to finish it. Look down the road. Think about what can happen down the road. You may have enough to get started, but do you have enough to finish it. As you think about that and you think about the budgeting process, make sure that you take time to see how does this plan of purchasing a building or construction, how does this affect us throughout our entire process? In just a moment, I want to take you back to our website and show you some budget tips and things that you can look at. Let's go now to this, and you'll notice the second tab here says Budget Tips. I have 5 budget tips here. The first one is understanding, again, the 3 years of financial statements that you'll need, understanding that debt and payroll expenses should never exceed 60%, looking at that your total income of the church can typically support a loan that's 3 times the amount of your income. It can go up to 4 times. Understand that you want to create a give back program. You understand that your church itself is tithing back into different programs within the church, Christmas for Christ, things like that. And then making sure that your budget is properly aligned, making sure that if there's expenses in the church, that you're allocating money that's been raised specifically for that to cover those expenses. I strongly encourage you to look over these budget tips. This third tab is a lender's page, and you can see where we have some calculations. You can see we have some percentages that we look at. And if you're interested in a loan, we can walk you through how this works. We've tried to put everything that you would need into this one dashboard to give you the advice that you need, give you the right things to think about as you prepare for your future. Again, I want to say thank you for this opportunity, because we understand that in growing the kingdom, it requires financial decisions that you may not have ever been trained to make. We are here to help you. And again, I'm so thankful that NAM has partnered with us at the Stewardship Group, because we want to see the kingdom grow together. We're with you, we're for you, and we pray God's blessing on you as you work in your field of labor to see His kingdom grow. God bless.